Welcome to Investors Insights. Our topic today is bearish Thanksgiving, bullish Christmas. A lot of volatility in the market, a lot of questions and debate going on. As you watch this vlog, we always invite you at the end of it to take time to give us a call, email us. That's how these topics come about. And so as we've gone through this month of November, which has not been dull, we've got a lot of facts and figures to discuss this morning. So Bobby, you immediately started talking about a lot of positive things that are going on in the economy. Talk about that.
There are positives, but we are coming off the worst market performance for the week of Thanksgiving since 2011.
Right.
But there's a lot to be thankful for. One is the consumer. We talk about it all the time. Consumer is 70% of our economy. And if you look at the Black Friday sales could total over $23 billion. Wow. That's an increase of 9% from last year. So the consumer is strong. So again, two other items that can make this market turn back up. One, on Thursday, the Fed minutes are released. If the Fed minutes say that there could be a slower rate hike next year, that could make the market go back up. And then I think one of the most important things happens on Friday. The G20 summit starts.
Right.
President Trump will meet with the president of China. If they could work out a trade deal, that could make the market really go up.
Oh, yeah, the market has definitely been focusing on the Fed and trade because that's the only negative I can find. So in the third quarter, earnings were up over 28.6%. That's much higher than expectations. The year is expected to be up over 20%. That's double what we thought coming into it. So so stocks are making a lot of money coming in. Interest rates are still down. We had low gas prices. Like you said, consumers looking great. Consumer sentiment is still high. So everything appears to be positive, but the market's saying, it's focusing on the few negatives.
So can we say it's the anticipation, the anxiety of things to come? It's worry with anticipation.
That's right. I think people are anticipating the Fed making an incorrect move. They hadn't made it yet.
Right. Well, in addition to that, you've got comments out there about a recession. Mm-hmm. Well, normally going into a recession, you see unemployment going up.
That's right.
You see an inverted yield curve.
That's right.
We're not seeing any of those things at this point in time.
We've had a lot of questions from clients and business partners asking, is the economy slowing down? 2 points, the GDP number is coming out on Wednesday. We're expecting 3.5% growth. That's a good number. Anything above 3% is a growing economy. Mm-hmm. Also, 5 of the 10 leading economic indicators are still growing strong. So if you look at those two numbers, there's certain areas of the economy, like housing, that are slowing down. But overall, we're still seeing a lot of strength.
Yeah, and actually you brought up about just in terms of different income levels and the spending that's taking place. Talk about that for just a moment.
Well, one of the positives we're seeing, not only in retail, but to the broader economy, as Bobby was just discussing, is that lower income Americans are participating in these Black Friday and retail sales of the year, first time in a decade. I mean, gas prices are down, but the main thing is the companies that they work for on hourly wages are up. The wages are up, so they're out there participating. We hadn't seen that in 10 years.
Right.
If you don't have a good economy, things like that don't happen.
Yeah, and another thing, going back to the retail side, and this was something you brought up, Adam, is that we've seen consolidation there in terms of the retail industry. Talk about that for just a moment.
And going back to Bobby's point, too, with Black Friday sales, closing strong. We have Cyber Monday today closing up. Of course, we saw 2 big retailers close earlier this year. That's had a big impact on everybody else. Mm-hmm. The other retail stores are starting to pick up the slack a little bit. Consumers are starting to go over there to those stores, buy the same products they would at the other two. We're seeing toys and appliances really explode across the market. We're seeing people that really have no business selling toys, being drugstores. We also talked about bookstores as well. It's going to be interesting to see if they have too much of a product at the end of the year going into next year.
So business models are changing, and with that consolidation, though, there's opportunity there, and with the consumer spending money.
The headline number is brick and mortar stores are going to see sales decline. But when you take into account that there's fewer brick and mortar stores, over 11,000 closings over the last 2 years, that means the remaining stores are going to see sale increases, not decreases. So if you're looking out at, at the market or at investments in the retail sector, the people that are surviving are likely thriving at this point.
Yeah, absolutely.
Very much so. So on that note, as we're approaching this last month of 2018, we want you to understand that there's a lot going on, a lot of positives taking place. We're watching all these issues as they develop. We're going to keep you up to date. And in addition to that, continue to send us the emails, continue the phone conversations. We thoroughly enjoy that, and we appreciate you taking time to watch this vlog as well as share it with others, as there's so much news out there as we have this volatility in the market. So on that note, have a great week. and just know we're going to keep you updated. Thanks.